Got $5,000 plus in passive income? Here's how you can capture more. Welcome to an enlightening journey where your financial dreams take flight. If you thought a passive income of $5,000 was the pinnacle of financial freedom, prepare to have your horizons expanded. Today, we delve into the riveting realm of multiplying that figure, turning your passive income into a wealth generation powerhouse. From reinvesting to exploring the little-known yet lucrative world of REIT, we've got a treasure trove of knowledge and strategies lined up for you. Why should you stay tuned? Because the potential to transform that $5,000 into an even more impressive figure is a game-changing move towards financial independence, and we're here to guide you every step of the way. To fully understand how to increase your passive income, it's vital to understand what passive income is. It refers to earnings derived from a rental property, limited partnership, or other enterprise in which you're not actively involved. This type of income has been a long-standing strategy for wealth generation and financial independence. It's the kind of income that continues to generate even when you're not actively working. One of the most effective ways to increase your passive income is to reinvest it. Instead of spending the money you earn, consider plowing it back into your income-generating assets. Let's say you have $5,000 in passive income coming from rental properties. Instead of using that money for personal expenses, you can use it to make improvements to your properties, which can in turn justify increased rental rates. Alternatively, you could use this money to make a down payment on additional properties, thereby diversifying your income stream and increasing your total income. In addition to property-related investment, you might also consider allocating part of your passive income towards other income-generating avenues. Stocks, bonds, mutual funds, or even business investments can provide lucrative returns over time. For instance, investing in a diverse portfolio of stocks and bonds can yield substantial returns over the long term, effectively increasing your passive income. Moreover, if you own a business that generates this passive income, reinvesting profits back into the business could stimulate growth and ultimately lead to increased revenue. Another fantastic strategy to increase your passive income is to invest in dividend stocks. A dividend stock is a type of investment that pays out a portion of the company's earnings to shareholders, usually in the form of cash or additional stocks. If you're making at least $5,000 from other sources of passive income, investing this money in dividend stocks could add another income stream to your portfolio. When choosing dividend stocks, look for companies that have a history of stable earnings and regular dividend payouts. It's important to note that while dividend stocks can provide a stable income stream, they require careful selection and diversification. Investors should diversify their portfolios across various sectors to minimize risk exposure. Additionally, you may want to reinvest the dividends back into purchasing more shares, a strategy known as a DRIP, or dividend reinvestment plan. This approach allows you to compound your investment over time, thus accelerating the growth of your passive income. The peer-to-peer lending industry offers another avenue to grow your passive income. By lending your money to other people or small businesses in return for interest, you can increase your earnings without a significant amount of work. Platforms like Prosper or Lending Club provide an online space where you can lend your money in increments as small as $25. Although there's a level of risk involved, diversifying your lending can help manage this risk while providing a substantial return. While peer-to-peer lending can be a profitable form of passive income, it's also crucial to diversify your loans across a wide range of borrowers. This can help to minimize risk if a borrower defaults on their loan. Also, consider the loan-to-value ratio and the borrower's credit score before lending your money. These indicators can provide a clear picture of the borrower's ability to repay the loan and the risk associated with it. Just like any other investment, due diligence and a well-thought-out strategy are the key to success in peer-to-peer lending. Real estate investment trusts, or REITs, offer a great way to earn passive income without the need to own, operate, or finance properties. REITs are companies that own, operate, or finance income-generating real estate. By investing in an REIT, you're able to earn money from the company's real estate investments. This can be a great way to increase your passive income without the usual responsibilities associated with owning a property. Before investing in REITs, take time to understand the different types that exist, such as equity REITs, mortgage REITs, and hybrid REITs, each offering different risk and reward profiles. Thoroughly research the REIT's management team, portfolio of properties, and dividend payout history. REITs provide an excellent way for investors to get involved in real estate without the need for direct property management, yet they require an understanding of the real estate market and trends. Creating and selling digital products is another excellent way to generate passive income. If you have a particular expertise, you could create a digital product such as an ebook, online course, or a software and sell it online. Once the initial work of creating and setting up a product for sale is done, the product can continue to generate income with minimal upkeep. When creating digital products, It's important to conduct market research to determine demand and establish a unique selling proposition. This involves understanding your target audience, their needs, and the current competition in the market. Effective marketing and search engine optimization, or SEO, are also crucial in ensuring that your product reaches the right audience. After the initial work of creation and marketing, sales from digital products can contribute significantly to your passive income stream. Finally, if you have a substantial amount of passive income, you might consider investing in a business. This doesn't mean you need to start a new venture and run it yourself. Instead, consider providing capital to a promising startup or buying a share of an existing business. By becoming a silent partner, you can earn a percentage of the business's profits without having to be involved in its day-to-day operation. Investing in a business can be a game changer when it comes to passive income, but it requires due diligence. Evaluate the business's financials, market position, and growth potential before investing. It's also advisable to seek legal advice to understand your rights and responsibilities as an investor. Remember, while the potential returns can be high, investing in a business also carries substantial risks. Diversification, therefore, remains essential, ensuring that all your passive income eggs aren't in one basket. Investing in index funds. A savvy way to increase your passive income is to invest in index funds. Index funds are a type of mutual fund designed to follow certain preset rules so that the fund can track a specified basket of underlying investment. Those could include S&P 500 index fund or total stock market index fund. They're designed to mirror the performance of a specific index, allowing investors to achieve broad market exposure with a single investment. They typically have lower fees compared to actively managed funds and can generate a steady return over the long term. However, investing in index funds requires a thoughtful approach. It's essential to diversify your index fund investments across different markets and asset classes to hedge against potential risks. The key to successful index fund investing is patience. These are typically long-term investments that grow over time. Also, consider the expense ratio of the fund before investing, as high costs can eat into your profits. Regularly investing a portion of your passive income into index funds can provide an additional stream of income, further increasing your financial freedom. Investing in cryptocurrencies. Cryptocurrencies have become a promising asset class over the past decade, offering a new way to potentially increase your passive income. By investing a portion of your income in cryptocurrencies like Bitcoin, Ethereum, or other emerging digital assets, you can potentially reap significant return. Many platforms also allow you to earn interest on your cryptocurrency holdings, providing an additional passive income stream. However, it's crucial to note that cryptocurrencies are highly volatile, meaning their value can fluctuate widely in a very short time. Therefore, while the potential for high returns exists, so does the potential for substantial losses. Before investing in cryptocurrency, it's important to understand the market, the technology behind the digital currency, and its potential for future growth. As always, never invest more than you can afford to lose, and diversify your investments to manage risk effectively. It's also recommended to use trustworthy and secure platforms for buying and storing your cryptocurrency to avoid potential scams and hacking incidents. Building a niche website or blog. If you have a specific area of interest or expertise, you could consider building a niche website or blog as an additional passive income stream. With platforms like WordPress, starting a website or blog has become relatively easy and cost-effective. Once your site gains traffic, there are various ways to monetize it, including advertising, affiliate marketing, sponsored posts, or selling your own products or services. Creating a successful blog or website requires time, dedication, and a clear strategy. Your content needs to be valuable and engaging for your target audience, and your site needs to be optimized for search engines to increase visibility. Consistency is key in blogging. Regularly updating your site with new and relevant content can help build and retain an audience. While the income from a blog may start small, over time as your audience grows, so can your earnings. Affiliate marketing can be particularly lucrative, as you earn a commission every time a visitor makes a purchase through your affiliate link. Remember, building and increasing your passive income requires patience and strategic planning. It's about putting your money to work for you and not the other way around. However, every investment carries some degree of risk. It is crucial to do thorough research and possibly seek advice from financial professionals before making significant investment decisions. As we come to the end of this video, we hope that these strategies provide you with insight and inspire you to expand your passive income. Whether you decide to reinvest your earnings, invest in dividend stocks, peer-to-peer lending, REITs, or start a business, remember, the goal is to create a stream of income that works for you even when you're not working. Until next time, keep growing your wealth and enjoy the journey to financial freedom.